Hello everyone, this is Tom Fox and I would like to welcome you to episode 215 of the FCPA Compliance and Ethics Report. The FCPA Compliance and Ethics Report is sponsored by Advanced Compliance Solutions, your one-stop shop for all things FCPA compliance related. Today I have with me Bill Waite. Bill is the CEO of the Risk Advisory Group. He is also a co-editor, contributing editor with myself on the FCPA blog. And I visit with him about a report recently released by the Risk Advisory Group entitled The Compliance Horizon. In this report, the Risk Advisory Group interviewed and took poll results from numerous multiple compliance officers and tried to take a look at the current state of the compliance profession, some of the biggest challenges, and where the profession might be going in the next couple of years. I found it very interesting and useful for a compliance practitioner to think about what may be coming down the road and how you might respond to that. The episode comes in at just over 20 minutes. We have a video this week, so we're back to a video podcast. I hope you enjoy it, and thank you very much for listening. Hello everyone, I'm Tom Fox, and I'd like to welcome you to this episode of the FCPA Compliance and Ethics Report. As you can see, we are back on a video podcast today because I have with me Bill Waite. Bill is the head of the Risk Advisory Group, and he is coming to us from London, England. I would say this morning, he might say this afternoon, but Bill, thanks very much for taking the time to visit with us.
Pleasure, Tom, and it is this afternoon.
And the reason I wanted to see if maybe we could visit is the Risk Advisory Group came out with a very interesting report called The Compliance Horizon that was released, I believe, last week. And you did a pretty comprehensive survey on a variety of topics. And I thought you came up with some, you were surveying compliance professionals, but you came up with really some interesting data that you put together in a report that we'll tell people how to get a copy of in a minute. But I thought if we could maybe go through the key findings in the executive summary, and then you maybe unpack each one of those a little bit. It started out with what compliance practice. Well, I guess first of all, who did you survey?
Well, we run a group in the UK which is called Women in Compliance, because you will have seen from the survey results 40% of all the compliance professionals that we've spoken to are women, and it's a good meeting pot for them to share their views. So we started with a roundtable discussion with them, essentially asking them the kinds of questions they wanted answers to. And as a result of that, we came up with a series of questions which are reflected in the survey. And we sent out the survey to our client base, and we got 217 responses from our clients. Mainly multinational organizations. I think more than 50% had workforces of 1,000 or more, so big representative sample, and a big cross-section of industry, financial services, farmers, telecoms, etc. So we regard it as pretty informative and pretty comprehensive.
And Bill, really the first thing that I found interesting was the survey results around the biggest external risks and challenges that the compliance professionals identified. Could you maybe walk us through that from the executive summary?
Sure. Well, I mean, I think that the first point is that 69% of all respondents felt that their businesses were more exposed to risk than they were 2 years ago. So a significant increase in perception of risk to prior history. 55% of those were concerned about increased regulation. 41% about geopolitical risks, and 37% about data and data privacy. Increased regulation, pretty straightforward there. Continues to be a lot more activity by different regulators across the world, cooperating, driving big financial sanctions and other regulatory relief to businesses. So no surprise there. Geopolitical risks, there was some granularity around this. People were talking about the Russian-Ukrainian situation, which clearly gave rise to sanctions. And indeed, that's an ongoing trend, because if you think about what happened last week with the Russian bomber, the Russians are now talking about sanctions against Turkey. So there's a lot of movement in that space. The other major concern that came through was the potential for UK leaving the EU, which would disrupt lots of regulatory systems and controls, I think. So concern about how to deal with those. And data privacy, well, we've seen lots of data privacy breaches recently. We've seen the latest European Court judgment on safe harbour and how that impacts on transfer of data between the UK, between Europe and the US, and that clearly is giving rise to concern, as well as significant data breaches. And I think you had your most colourful one in relation to the adultery website, which has clearly caused some repercussions.
That was Canada. Thank you very much.
Oh, well, close.
And really, the kind of the tie-in that I saw that intrigued me was how that related to what people saw as the role of compliance, because I think maybe you and I, starting as lawyers, maybe thought of compliance as one thing, but that role seems to have evolved, and your data seems to bear that out.
Well, I think that's right. I mean, I think we asked the question, what best describes the role of compliance? And 59% said protecting the company's reputation. 59% developing policies and procedures, 51% keeping the business out of trouble. That's interesting, and I think again it's driven by the degree of sanctions that's being imposed, whether it's 8.8 billion in Bank Paribas or 1.9 billion in HSBC, or significant numbers. I do though think, and this is a theme I come to very, very regularly when I'm talking about this, I think we're looking through the wrong optic here. I mean, good compliance isn't just about compliance, it's about making very, very good business decisions. And to do that, you need to gather and gain information about who you're doing business with, the risks of different environments you're doing business in. So I think that there's driving the trend towards just protecting the company's reputation is both a false inhibitor, but also I think a misconception of what you can really drive out of effective risk management, which is what we're really talking about. And that's there to aid good business decisions. It's not just there as a barrier. It's not just there to make sure you do the wrong things. It should positively be there to make sure you do the right things.
So if I could maybe dive in a little bit into just one of your remarks around know who you're doing business with.
Yeah.
That's obviously background due diligence has been around quite a while. You've been one of the leaders in the industry on that. But it's really simply more than just, is there a red flag around corruption? It's really knowing, is this a person that you need to do business with? Do you want to do business with? And should you do business with? Is that the type of analysis that either you're seeing your clients want or you're actually providing that to them?
Yeah, I mean, we clearly it's not just about is there a red flag. It's about competence, skill, ability, the ethical position of the business that you're dealing with. So I think to the extent that companies concentrate on red flags, they're not doing what I'm suggesting that they could be, which is driving value out of a process. And that process is really to understand to a high degree of granularity who you're actually doing business with in the environment in which you're intending to do business, and whether that's something that's going to add value to the business transaction or detract from it. But again, I think that compliance is being the whole word compliance is perhaps a vernacular that will need to change over the next year, 2 years, 10 years to drive proper value out of what is increasingly a function which is critical to the entire operation of a business.
The last sort of general area was around compliance skill, and I was fascinated that the way you presented the findings on a couple of things. Without really going into the granularity of the findings, it was the last of the major findings, yet it seemed to me to be that was a natural place for it because everything else really drove to those findings. And if I could suggest that people or compliance officers see the need to move the way in the direction you are suggesting, and it's not just let's comply with this law, it's really moving to a much more holistic approach of compliance as adding value and indeed making the company better run. So with that kind of introduction, what did you find that people were saying around the needs for increased compliance skill, and perhaps how or some of the ways to get them?
Yeah, well, 38% of all the respondents said for compliance to operate effectively, it needed more people with the right knowledge of the business. That, as you've suggested, underlines the point that I'm making. Unless you actually understand what your business does, it's very difficult to be or be perceived to be anything other than a barrier to the way your business is going to operate. And that really does mean an understanding of what you do, both from business origination through to operational risk management, through to exiting businesses. And we've all seen how problems within business operation or how businesses have been acquired can tarnish asset values when you come to exit. We're doing a lot of work at the moment in the context of private equity, who are very concerned about successor liability from a US perspective. They're also concerned about operational risk management within businesses, within assets that they may buy or assets in their portfolio, because they understand that there's a discount that will be applied to value if they can't demonstrate clarity around that.
Is that's something that's really an ongoing conversation here in the United States? Do you find that conversation ongoing really beyond the UK or Europe into other clients that you have across the globe?
You're right. It's being driven by the States, but we are seeing it. We are seeing professional advisors raise those kinds of questions more often. We worked on a very interesting case in the Middle East recently, which was concerned with the exit of a business. And one of the real concerns was, how do you identify, or more accurately, how do you disassociate an advisory board from the revenue streams to try and deal with concerns about how those revenue streams were originated. I think that more, there is the regulatory driver, there is the DOJ, there's the SEC, there's the SFO, and you've probably seen today's the first deferred prosecution agreement around due diligence that we've seen in the UK. But we're seeing more professional advisors getting engaged in that process, in part through fear of their own position. And I guess the Watts Water case with Sidley is an example of where that could go wrong. But we're also seeing banks asking those questions. And it won't be long before you see insurers asking the same questions. You can get insurance now against M&A transactions going awry. So these kinds of drivers, out with the pure regulatory, I think are influences which are going to have at least as much influence as the huge fines that we're speaking about.
That's I can't tell you how near and dear to my heart that is. I phrase it as a business solution to a legal problem. But when you start having a driver that is your insurance company or your bank or your private equity company that's funding you and allowing you to take your own cash out of your business through an influx of investment, I think that is what is really going to drive businesses to understand that a much more holistic approach is needed. And then the second part that I see is companies that actually have these processes and systems in place, while they may have put there in response to a regulatory framework, they actually help make the company better run, which goes all the way back to your point of simple compliance may not be the right term anymore. I'm not sure what it is, but we were really moving much past where we were even just a few years ago.
Well, I think that's right. I mean, there's still going to be a while before it moves from the Fortune 100 to the Fortune 500, or from the FTSE 50 to the FTSE 250, or from CAC 40, or whatever it might be. But I think the message is starting to be heard, and the more points at which they touch, those messages touch an organisation, the louder they will be heard, and that's quite important. I think we're also going through new generations of CEOs and main boards who've been living with these issues now since the US first started its long-arm extraterritorial reach 10, 12 years ago. This is more of a business vernacular, and therefore it's more on the table of boards. And to the extent that those boards can recognize value in it, which I'm sure they will, then that will also have an impact on how much resource, what the perception is, and how to drive these things forward. The worst businesses and the worst way of making compliance effective is to treat it as a barrier, as the pure internal policeman, because then resources are starved. It's generally last minute. It's not particularly effective. And to be frank, I think we've seen some of that in relation to what some of the banks have been up to.
We've got just a few minutes left, and I wondered if we might turn to the veiledness of the future and what you might see in the year ahead, or what rather the report suggested to you that might be seen in the year or two ahead. Obviously, there's some political changes coming in the United States. We're going to have a presidential election, but politics on the ground is much more dynamic than an election every 4 years or even every 5 years under the UK system. What did the report indicate that people might see or at least worried about in the years ahead?
Well, again, it's I think the issues around regulation, the use of sanction as a foreign policy tool is not new, but its effectiveness is increasing, and the concerns around that are great. And the speed at which sanctions can now be imposed, I think, causes organisations concern. I think the world is more dynamic. You know, we run a political risk and security business as well as a strategic intelligence business, and one is seeing a lot more fluidity and a lot more change in big areas of the world very quickly. The world isn't like it was when we were kids, when you could travel almost anywhere and do anything. Now we're faced with all sorts of different threats that governments are stretching to find ways to respond to. And I think that one of those is clearly outsourcing their policy requirements to corporates to try and make sure what they want to happen happens. So I think that's difficult for all organisations to deal with. And of course, we've got the data privacy, information security issues, and concerns about how you control other governments from using their investigative methodologies, let alone individuals. You're dealing with people in bedrooms through to entire government state apparatus that corporates have to defend against, and that causes a lot of anguish amongst our clients and compliance professionals.
Let me just end with this question because it's something I've been thinking and writing about a lot, and it's along the lines of the following. I think that the Volkswagen emission testing scandal may well be the biggest compliance event for quite a while. And I recognize that it's not anti-corruption compliance, it's not sanctions compliance, it's another type of compliance. But the reason I think it will be such a big scandal is twofold. One is that it's damaged the national German brand, at least as Americans perceive the national German brand of quality and honesty. And when you damage a national brand, you tend to have a government response. And that can be increased regulation. It could be very aggressive and dynamic enforcement. But the second part is that this is the first corruption scandal that I can recall where competitors were damaged by the actions of a company. So immediately BMW, Mercedes, their emissions testings were called into question. And typically, even a scandal as big as Walmart, Petrobras, you didn't see Target or a large retailer in the United States being impacted by Walmart's FCPA issues, or even any of the large multinational companies or state-owned enterprises around energy really directly affected by Petrobras. And I was very intrigued that one of the responses to the competitors was suggested by the head of the German National Manufacturing Association, and he said along the lines of the following: that compliance was the key, not only to comply with the law, but the transparency of your compliance program to demonstrate to your stakeholders, your shareholders, your board, the government, and even the public, if necessary, that you were doing business, at least within the regulatory framework. And I wondered if any of that is sort of floating around in what you either saw or think maybe going down in the future.
Well, I mean, I think that firstly, I think the 7 billion provision that the board of Volkswagen have made for the scandal is nowhere near big enough, not by any stretch of the imagination. I think Volkswagen made a huge mistake in coming out early and saying it was just a few whether they may be misguided or dishonest. I think that quite clearly is wrong, and they're going to live to regret making that statement early. VW, one mustn't forget that VW has been the subject of a number of scandals over the years. Right. There was a time when sex, drugs, and rock and roll was paid or given to the members of the Works Council in return for doing soft deals over employees' rights. And at that particular time, which wasn't that long ago, the board came out and said never again. And clearly not very long after, one's got a massive scandal. You're right, it does go to the entire ethics base of the business. Honesty, integrity, the fact that people may have thought at any level that this was an appropriate course of conduct has to cause you grave concerns about what messages are being conveyed within that organisation. As to it damaging brand Germany, I have to say that over the years I've investigated more corruption scandals involving German companies than perhaps any other nation in Europe. Now that may come as a surprise to some, but it is a fact. So I think that they've been doing very well on the PR front, particularly in the States, but not very well on the actuality of how they're managing their businesses.
Well, your perception is reality, so that would make sense.
As to government response, it's a serious issue, isn't it? And I don't know, government struggle other than through sanction to impose their policy on the way that corporates operate, and then they transfer the burden to the corporate, and then they've got to discover it and deal with it. But I'm not sure that this is about a criminal redemption in some way. I think it's very much about German industry thinking hard and long about the way it operates its businesses beyond the pure basics of FCPA Bribery Act. It's a lot deeper than that.
Well, Bill, as always, very enjoyable to visit with you. Some great insights. The report is entitled The Compliance Horizon by the Risk Advisory Group. And if our listeners wanted to know where they could obtain a copy, could you point them in a direction?
Well, if they come onto our website, which is www.riskadvisory.net, they will get the details of it, and they just have to fill in a few details, and then the report will whiz its way to them, irrespective of concerns around the Chinese investigating our IT.
Well, Bill, as always, a pleasure. Thank you very much, and I look forward to continuing the conversation.
Thanks, Tom.
Hello again, this is Tom Fox, and I'd like to thank you for listening to this episode of the FCPA Compliance and Ethics Report. I have 2 calls to action for you. The first is, if you have any questions, please send me an email, and I will put them in my next mailbag episode. The second thing is, if you enjoyed this episode, I would appreciate it if you could go to iTunes and rate this podcast. Thank you very much for listening, and I look forward to visiting with you again. This is Tom Fox.